This is the advanced financial reporting of 21st May 2021. I'm going to present the answers and the questions. So the first question was a question on group accounting, or what we call consolidated group accounts. And this question, it required Part A, goodwill arising on acquisition of S Limited and R Limited. At Part B, consolidated statement of financial position for P Group as at 30th June 2020 in accordance with International Financial Reporting Standards, IFRSs. Question 2. Question 2 was a question on reconstruction, company reconstruction, and the first part, that is Part A, required the following account in books of Swara Limited: realization account, Twiga Limited account, ordinary shareholder sundry members account, preference shareholders sundry members account. And then Part B, statement of financial position of Twiga Limited as at 1st April 2021 after completion of the reconstruction. Then we have question 3. Question 3 was a question on group cash flow statement. This was a question on group cash flow statement, where it required consolidated statement of cash flows for L Group for the year ended that 1st October 2020 using the indirect method in accordance with International Accounting Standard IS7 statement of cash flows. Question 4. Part A required discuss the principle for determining the net realizable value of inventory under IAS2 into bracket inventories. Roman 2, calculate the value of closing inventory in the books of Haraka Limited as at 31st December 2020 by applying the principle of IAS2, or what we call International Accounting Standard 2. Part B, required prepare extract of financial statement for Naivasha Limited for each of the year ended that 1st December 2018, 2019, and 2020. Finally, question 5. This was part A, and part B, these are theoretical question, and even part C, it's a theoretical question. Let us go to the answers. We have the answer to part A of question 1, goodwill arising on acquisition of S Limited and R Limited. Then part B, consolidated statement of financial position. Let's start with non-current asset, current asset, equity, and liabilities. Then we have working 1, working 2, working 3, working 4. So up to working 4. Then question 2, we have the realization account. The realization account, this is ordinary shareholders members account. This is preference shareholders members account. Then we have working 1, and then we have Roman 2, Twiga Limited account, and Roman 3, ordinary shareholders sundry members account. And then we have the preference shareholders members account. Then we have statement of financial position of Twiga Limited as at 1st April 2021 after completion of the reconstruction. But before that, We have working 2 of the business purchase account. Then we have working 3. And then now we have the statement of financial position as at 1st April 2021 of Twiga Limited. From there, we go to question 3, the cash flow statement. So here we have the cash flow statement of L Group. We have cash flow from operating activities, changes in working capital, cash flow from investing activities, cash flow from financing activities. Then we have working 1, working 2, working 3, working 4, working 5, working 6. So working 6 is the last working of that part of the question. Then we go to question 4. Discuss the principle of determining the net realizable value of inventory under IS2 inventories. That is very simple. Then you have Roman 2, calculate the value of closing inventory. Then part B, prepare extract of financial statement for Naivasha Limited. So these are the extract after the above workings. Then question 5, the theoretical part. Then we have part B, explain how the following might address the limitation of financial reporting and improve the usefulness of the annual report. Then Roman 2, integrated reporting can address the limitation of financial reporting and improve this. The following is so okay. And finally, we have part C, required with regard to IPSAS 39 employees benefit, describe the element of the remeasurement component of the net defined liability bracket asset and indicate how the treatment of the remeasurement component under IPSAS 39 compares with that of commercial sector entities under International Accounting Standard IAS 19 employees benefit. So this is the end of this presentation. If you want the combined PDF from 2015 to 2025, you can download it at just 100 shillings in the description or comment section below.